Welcome to the deep dive. We're here today to really cut through the noise.
That's the plan.
We've got quite a stack of source material, market news, company stuff, economic shifts, and our mission. Pull out the key insights for you.
Yep, we've gone through CNBC, BBC, Wall Street Journal, CNN, Reuters, the New York Times, plus official releases from the Department of Labor and a whole load of company earnings reports.
And it's all current as of today, Thursday, May 29th, 2025.
And there's a really clear thread running through a lot of it, isn't there? Policy, specifically tariffs.
Okay, let's dive right in then. Starting with the market action because, well, it shows this theme straight away. Yesterday, Wednesday the 28th, not a great day.
No, not really. The main indices, the Dow, S&P 500, and NASDAQ, they all slumped, over 0.5% down.
But then look at this morning's futures trading.
A different story, pointing higher. NASDAQ futures especially were up over 1% pre-market.
And here's the kicker, right? The sources directly linked that morning bounced to news about a court ruling, a ruling that went against President Trump's big tariff plan. Is the market always, this quick to react to policy shifts?
Well, maybe not always quite this immediate, but the speed here, it really underscores how much uncertainty these tariffs have been causing.
Right.
So this positive reaction just to the possibility of tariffs being rolled back, it suggests investors had priced in a pretty big tariff risk premium.
Ah, okay.
And when that risk seems to ease up, even just for a moment, you get this kind of bounce as that premium adjusts. It just shows how heavily this policy stuff is weighing on things.
That makes total sense. It's clearly a dominant factor. Okay, so beyond the big market moves, lots happening with individual companies too. Let's talk beauty first. e.l.f. Beauty making a big play.
They're reportedly acquiring Hailey Bieber's skincare brand, Rhode.
For up to $1 billion. That's huge. Rhode apparently does $200 million in sales already and wants to go global via Sephora.
It really signals the power of these celebrity brands, the ones that actually show strong sales. For e.l.f., it's a major growth move, buying into a hot segment.
And leveraging Sephora's reach.
Exactly. Consolidating around proven success.
Okay, shifting to the skies. Airlines. United is heading back to JFK Airport.
Yeah, through a new partnership deal with JetBlue.
So what are the terms? Reciprocal frequent flyer benefits. United gets flights into JFK starting 2027.
Right, up to 7 daily flights for United. And JetBlue gets 8 flights over at Newark in return.
Interesting.
It's a fascinating strategy, isn't it?
Yeah.
Shows how airlines are getting creative to grab slots in these jammed markets like New York without, a full merger.
A workaround for limited space. Makes sense. How about energy?
Shell's buying a bigger piece of an offshore oil field in Nigeria.
Okay.
They're picking up Total Energy's 12.5% stake for about $510 million. That brings Shell's total share up to 67.5%.
So doubling down on a known asset.
Pretty much. Suggests they see good value left there, want more control, boost their production in the region. Straightforward consolidation.
Okay. And then over in Japan, Sony's doing something interesting, spinning off its financial services arm.
That's right. They plan to distribute over 80% of the shares straight to Sony shareholders.
So the finance unit can kind of stand on its own, raise its own money.
Exactly. And Sony itself is doing a share buyback, about $690 million worth.
And the source mentioned this is a big deal in Japan.
Yeah, apparently the first direct listing spinoff there in over 20 years. It really points to Sony wanting to focus more on its core, entertainment and tech.
Right.
While maybe letting the financial side shine on its own. Yeah. Could unlock value for both.
Okay, from finance to AI. China's DeepSeek. They've quietly put out an upgraded AI model.
And what's interesting is how it's ranking.
Yeah, the source said it's like just behind OpenAI for coding benchmarks.
Right. And actually ahead of XAI and Alibaba's models in coding.
Wow.
It just shows how fast AI is moving everywhere. Not just the big names we always hear about. Competition's heating up, especially in specialized areas like code generation.
Okay, let's talk cars. Toyota.
Yeah.
Strong April sales globally, up 10% year over year, production up too.
Yep, 877,000 vehicles sold. Hybrids are a big driver, apparently 34% of their sales so far this year.
But here's that theme again. The source also mentioned a pre-tariff buying surge in the U.S.
Exactly.
Yeah.
It suggests people might be thinking, prices might go up and buying those imported cars now.
Pulling demand forward.
Right, which can give you a temporary boost, but then maybe a slowdown later. It's that tariff effect again.
And sticking with government influence, Starlink. There's talk it could get federal internet funds from that huge $42.5 billion fiber rollout program.
Yeah, it's under review by the Trump administration. And the source raises a point. This could actually be a risk for the companies building out fiber.
How so?
Well, because Starlink generally offers slower service, often costs more than fiber.
Yeah.
So shifting funds that way could disrupt the plans and investments of those fiber ISPs.
A potential policy shift favoring satellite over fiber for rural areas.
Could be significant implications for how we fund connectivity.
Okay, one more company-specific item, this time healthcare. Moderna. The Trump administration canceled contracts with them.
Over $700 million worth, yeah, related to their bird flu vaccine development.
Why?
The stated reason was that the vaccine didn't meet scientific standards.
Ouch. That's gotta hurt Moderna.
Oh, definitely, especially with demand for their COVID shots reportedly falling. Losing a big government contract like this, it jeopardizes a key potential future revenue stream, a real setback for their pipeline.
Okay, let's pivot to earnings highlights. And again, you can really see the tariff impacts showing up for some companies.
Well, let's start with a big winner, though, Nvidia.
Absolutely. Nvidia's stock, wow, vaulted 6% pre-market. They just crushed their earnings estimates.
Crushed them. Revenue was $44.06 billion. That beat estimates by over $800 million. Huge jump, 69% year over year.
And earnings per share, 96 cents, beat by 21 cents, up 57% from last year. And get this, that was even after taking a $4.5 billion write-down.
Right, a write-down tied to the U.S. export bans to China.
So demand is just insane.
It seems so. So strong they could absorb a multi-billion hit from trade restrictions and still blow past expectations. And it wasn't just their stock.
No, it lifted the whole chip sector, right?
Yeah.
Qualcomm, Marvell, ASML.
Exactly, a global rally.
Okay, now contrast that with the retailers feeling the tariff pinch directly. Best Buy. They cut their forecast for fiscal 2026, both sales and EPS. And they explicitly said it's because tariffs are making electronics more expensive.
Yep. Q1 revenue missed, though adjusted EPS squeaked by, but net income sank 18% year over year.
And the stock reaction.
Dropped over 1% pre-market. It's a really clear example, isn't it? Tariffs mean higher costs, which means lower forecasts. Direct line.
Well, it's not the same story everywhere in retail, is it? Abercrombie and Fitch.
Right. They also cut their full-year EPS forecast, citing a $50 million hit from tariffs.
That their Q1 results actually beat expectations, and the stock soared 14%.
Yeah, it gets more nuance there. So tariffs are a problem. They acknowledged it in the forecast cut, but their actual performance in Q1 was strong. The source mentioned Hollister doing particularly well.
So good underlying business trumped the tariff concerns for investors.
It seems like it in this case. Brand strength, maybe product mix. Other factors outweigh the tariff headwind, driving the stock up despite the warning.
Interesting contrast. Kohl's had a bit of a mixed picture too, right?
Kind of. They beat Q1 EPS estimates, posted a smaller loss than expected. And importantly, they kept their full-year outlook the same.
Despite tariffs and what the source called leadership turmoil.
Right. So keeping guidance steady suggests maybe some resilience, good cost control, or perhaps they were just conservative to begin with. Stock rose 5% pre-market on that.
Okay. Dick's Sporting Goods reaffirmed their guidance too after solid Q1 results.
Yeah, their fiscal 2025 EPS guidance holds, but the source made a key point.
That it excludes costs from that planned Foot Locker acquisition.
Exactly. That $2.4 billion deal isn't factored into that guidance. So it gives investors a look at the core business expectations before the complexities of that big acquisition kick in.
Got it. Okay, let's switch to EVs. China's Li Auto.
Their Q1 net profit was up almost 10%, beat estimates, revenue up slightly.
And they're forecasting more deliveries in Q2, up to 128,000 vehicles. Sounds pretty good.
It does, but they also gave a warning. Soft growth because of really intense competition in the EV market.
Especially in China, I imagine.
For sure. So even profitable companies are feeling the pressure. That warning is key. Stock fell slightly pre-market.
Okay, let's step back. Broader economic signals. The Fed minutes came out.
Yep, from the last FOMC meeting. And they showed officials are basically holding off on rate cuts for now.
And the reason? Does it tie back to our theme?
Directly. They cited heightened uncertainty, specifically from President Trump's tariff proposals and fiscal policies.
So the Fed sees risks from tariffs too.
Both ways, it seems. Risk of inflation going up if import costs rise, and risk of recession if trade fights slow things down too much. That policy uncertainty is a huge factor for them.
Wow, tariffs influencing the Fed's thinking too. Okay, what about the job market? We got jobless claims numbers.
We did. Seasonally adjusted initial claims, the main number people watch, came in at 240,000 for the week, ending May 24th. That was up 14,000 from the week before.
An uptick.
A noticeable one, yeah.
Yeah.
But the 4-week moving average, which smoothed things out, that was actually down just slightly, 231,000.
So maybe not a major shift yet.
Exactly. The underlying trend still looks relatively stable. Labor market still seems pretty tight overall, despite that weekly jump.
Okay, oil prices rallied.
They did, up nearly $1. And again, the source connects it right back to that court ruling blocking Trump's tariffs,
Wow.
easing global demand concerns. The idea being, if those broad tariffs don't happen, maybe the global economy won't slow down as much, so demand for oil might hold up better.
Another immediate reaction to trade policy news. Okay, interesting stat on global wealth.
Yeah, the U.S. now apparently holds 37% of the world's millionaires and 33% of its billionaires.
That's a lot.
It is. Over 6 million people in the U.S. with over $1 million in investable assets, according to the source. Just underscores the concentration of wealth here.
And how are other countries reacting to all this tariff pressure? South Korea?
Their central bank, the Bank of Korea, cut interest rates down to 2.5%.
Why?
Well, their economy's been contracting, and again, the source explicitly mentions the tariff pressure from the U.S. as a factor. They also lowered their GDP forecast for 2025 way down to 0.8%.
So U.S. trade policy causing ripples, forcing other central banks to act.
Absolutely. Tangible global impact.
Okay, let's circle back to that court ruling we mentioned at the start. The Federal Trade Court voided Trump's global tariffs.
Right, saying he exceeded his legal authority. But, and this is a big but,
The administration plans to appeal.
they do, and they vowed to use, quote, other bureaucratic tools to try and get those tariffs back in place anyway.
So the uncertainty isn't over.
Far from it. The ruling was maybe a temporary pause, but the fight continues. That means trade policy uncertainty is sticking around.
And adding to the tension, the U.S. actually halted some tech exports to China.
Yes, key components for things like jet engines, chemicals, computer chips, machinery, stuff bound for China is blocked.
Why now?
Stated reason is retaliation for China restricting exports of certain minerals.
So, tit-for-tat escalation.
Definitely an escalation.
Ah.
It's moving beyond just tariffs on finished goods into these critical tech components, disrupts supply chains even more.
And the human cost of all this. The UN put out a forecast.
A pretty stark one. They're forecasting 7 million fewer jobs globally in 2025, specifically because of an escalating trade war.
7 million jobs.
Yeah, and it highlights 84 million roles tied to U.S. demand, especially in Asia-Pacific, that are potentially at risk. It all comes down to weaker hiring, falling GDP expectations globally.
It shows the real-world impact beyond the markets.
It really does. Reduced demand, disrupted supply chains, business uncertainty. It all leads to fewer jobs worldwide.
Okay, let's quickly run through some of the other earnings numbers that came out, just the highlights from the sources.
Okay, Nvidia we covered. Revenue of $44.06 billion, beat up 69%. EPS 0.96, beat up 57%.
Salesforce, revenue $9.83 billion, beat up about 7.6%. EPS $2.58, beat up about 5.7%.
Royal Bank of Canada, revenue $11.03 billion, beat up over 10%. EPS $2.67, beat up over 22%.
Canadian Imperial Bank of Commerce, or CIBC, revenue $4.89 billion, missed, but up 7.7%. EPS $1.43, beat up almost 11%.
Ziva Systems, revenue $759 million, beat up nearly 17%, but their EPS $1.37 actually missed and was down almost 9% year over year.
Agilent Technologies, revenue $1.67 billion, beat up 6%. EPS $1.31, beat up over 7%.
HP Inc., revenue $13.22 billion, beat up about 3.3%, but EPS now 71 cents missed and down over 13% year over year. And Nutanix, revenue $638.98 million, beat up almost 22%. EPS $0.42, beat, and a big jump up 75%.
Okay, got it. And finally, a quick look at IPOs this week, ending Friday, May 30th. What hit the market today?
Confirmed today, May 29th, was Fuxing China Group Limited. They make zippers in China. About $109 million in revenue last year, slightly down.
Okay, and also some SPACs.
2 of them, yeah. Blank check companies, Jenna Acquisition Corporation 2, looking at fintech, sports, real estate, things like that.
And
Wintergreen Acquisition Corp, focused on media, tech, and telecom.
right. And anything expected tomorrow, Friday?
Estimated for Friday is Patanium Limited, a Hong Kong cosmetics company. Smaller, about $9.6 million in revenue, but growing almost 10%.
Huh, another cosmetics name. Interesting, given the e.l.f. and Rhode deal.
Yeah, interesting to see activity across the board, big earnings, small IPOs, SPACs, even while these huge macro themes like tariffs are dominating everything.
Absolutely.
Yeah.
So if we try to tie this all together, what's the big picture? We saw the market jump on tariff news, companies explicitly cutting forecasts due to tariffs.
While others seem to navigate it differently or have stronger underlying stories.
Right. Then you have the Fed holding rates because of tariff uncertainty, the UN warning about millions of jobs.
It really feels like trade policy and tariffs in particular isn't just a story. It's like woven through almost everything we looked at today.
He really is.
So I guess that leaves a big question for you, the listener, to chew on. Given how central all this uncertainty around trade rules and tariffs is right now,
Yeah.
influencing stock prices, company plans, Fed decisions, global jobs, what does this level of policy volatility actually mean for making your own decisions?
Mm.
How do you factor this constantly shifting ground into, thinking about your investments, maybe your career, or just understanding this interconnected global economy we're in?
That is definitely something to think about. Thanks for joining us for this deep dive today. We hope peeling back the layers on today's news gave you some useful clarity.